Welcome back everyone. So today we're going to be talking about COGNEX. This is a dividend US based company and it's one of which that I've been buying into, as you can see on my Trading 212 platform. And so today we're going to be looking at what exactly COGNEX does, what type of products they offer. So definitely stick around to the end if you find this interesting. Now quickly before we jump into the video, let's just set the random number generator. This is the number of likes that we're trying to receive on this video. So this week it's set to 73 thumbs up. And so all you have to do is hit that thumbs up right now and let's get into the video. So first up, let's check out their 3D inspection and vision solutions. So you can see in the video we have a manufacturing plant for vehicles and they're using their 3D vision solution to work out whether there's any defects in the product. So when we look at defects, we're in the millimeter position. And so you can use this tool to scan and look for any defects that may exist. In this example, it's with a car part or an actual vehicle itself. Now that's just one of many examples. We've got another one here within the food and beverage industry. So here we're using machine vision effectively to minimize the downtime with the high level goal of reducing any recalls for an overall improved product experience prior to the distribution. So here we've got our standard cans. We're checking whether the lid cap has been opened or not, and equally if there's any defects on the product itself. And equally with these serial energy bars, we're checking for the actual dimensions to make sure that they're similar each time. And then for more complex food scenarios, so in this case stacked biscuits. So here we're scanning to check for the correct number, so there'll be no more cases of having that extra biscuit or extra Walker's crisp packet like you may have experienced in the past. So let's move on to their actual logistic solutions. But the main issue with any distribution center is to make sure that both the printing and the label placement is accurate. And so for the actual quality of the label, we don't want them to be faint or blurry. Equally, we don't want the labels positioned to the edge because that risks having the label fall off of the box and then you have to manually intervene. And so we have these different barcode readers which have high read rates. There's no moving parts, so the device lasts longer. And there's also performance feedback that we'll look into in a bit. But here these barcode readers can catch early issues early on, which maximizes the throughput and also reduces delays. And so when we receive a label that is unreadable, that information is stored, and then it's possible to both identify and then subsequently resolve the system defect. And so there's this positive feedback which allows you over time to improve the process of the distribution center. That's probably becoming apparent right now, but when you're dealing with large-scale solutions, you definitely don't want to have any types of failures or defects out there. You really want to be in the 98 to 99% when it comes to throughput with whatever it is that you're trying to package, or if you're building a product out there, the level of precision may need to be 99.99% for instance. But just as a final example, and this is probably one of the reasons why I brought into the stock, and that's when we look at their machine vision systems. And so here we have different types of vision systems. There's 2D and 3D devices out there, and of course with the corresponding software. And so with their range of devices, they've got object location, 3D vision, their barcode reading that we saw earlier, but also the ability to distinguish between different colors, and probably most importantly, their deep learning tools. So we've got the likes of pick and place robotics guidance out there as well. And all of this is driven by their machine vision systems. So over time these systems are improving. We've also got the likes of weather resistance and customized solutions due to their modular architecture. Now you're probably wondering who actually uses COGNEX. So we've got some big names out there. We have the likes of Amazon, Apple, BMW, Unilever, and many other companies. But those are some of the highlights out there. They all have one thing in common, which is these large data centers and manufacturing processes. They can all use the underlying architecture. And so with any product out there, if you are providing a service, it's great to have big players out there that are using your product. Now let's take a look at how the stock has been performing over the last year. Again, for anyone that's new to the channel, definitely hit that thumbs up and subscribe if you're interested in this type of content. I have new videos out each week, but we can see in early February that there was actually a peak around $94 or so. Recently there's been a bit of a sell-off, but that trend has been going in the other direction, and at the time of recording we're at the $84 mark. So understanding what this number means in the grand scheme of things, we've got a market market cap of 14.5 billion. It's definitely a large figure, which shows that if you buy the stock at the moment, you are paying a premium. Equally, their payout ratio, a little bit too high for my liking when it comes to dividend-based companies out there. And the dividend yield at the moment is really small. You almost shouldn't invest in this company purely based on the dividend yield that they provide. It's 0.29%. And so just scrolling down, we can see that their revenue for 2020 was 811 million. The net income was 176 million, so definitely a profitable company with their profit margin at the 21 to 22% range. And then let's just have a look at the quarterly earnings. So here we've got Q1 of 2021. We have a revenue of 239 million and a net income of 69. So just trying to extrapolate that information. If there's 4 quarters in each year and we estimate the same growth each quarter, then we're looking at an extra 100 million profit, around 276 million. Now that is a really quick estimate, but within the space of a year, at the end of 2021, we could be looking at an increase of over the 40% mark. Now that's a very bullish type of prediction, but nonetheless, we already have the records here that this company is profitable. And that probably does explain why their dividend yield is so low. And coupled with their payout ratio, which is pretty high, it sounds as though it's a sensible decision that they're not providing too much money to their shareholders, and hopefully they're allocating a good portion for future research for their new products in the future. And then it's always good to understand their asset breakdown. So we've got total assets of 1.8 billion, liabilities are around 500,000, slightly over there, so a debt to assets of just under the 30% mark. For companies that build products out there, a lot of their money is tied into assets, but given that their debt to asset ratio is at 30% mark, that's a great number in my books. And so that's all for this video this week. Thanks everyone again for subscribing. The question I have for you this week is, will you be investing in the likes of COGNEX? Let me know your thoughts in the comments below. New videos are posted each week. So thanks for watching everyone, and with that said, I'll catch you in the next one.